Hello there, I am back, and I had a question over the weekend regarding how do I set up the charts and figure out what a trend line and how I determine what direction the market is moving in. So I guess I'm going to start with that. Now, I use I guess a trading station, a free trading station to set up my charts. It's FXCM trading station. Um, I've been using this for like ever. They call it MarketScope 2.0. I'm not sure if it's still free, but I go to the UK to get a demo account, and basically it's pretty easy. You just go here onto the World Wide Web and type in FXCM UK demo, and then just walk yourself through the process of setting yourself up with a demo account. Now make sure when you put country of origin you put UK, because believe it or not, when you find the United States on here, United States isn't allowed, and I don't think Canada is either. Let's see here. Yeah, Canada. So you're not allowed to actually trade forex binaries in these two jurisdictions, and that's why I use the NADEX. But I can still, use their trading software platforms that are available, and and do that. If I open up a demo account, it's free, and so on and so forth. But just make sure when you do everything, do it in the U.S. dollar currency. Cool. So yeah, I have my market scope, and it gives you a lot of stuff. Like, I don't like this. This is way too much information. What I do like though is it does give me real-time data on U.S. oil, all the major currencies, a bunch of crazy little ones here on the side. And it gives you some very exotic ones. And it also gives you all the indexes. The one I like mostly is the S&P 500, but you can trade the US dollar index, the China 50. I think it was closed on Friday. Australian, NASDAQ. I believe the Dow's on here somewhere too. And then you're allowed to trade the major markets. There it is. And you're allowed to trade all the commodities. I prefer nat gas. You can play UK oil, but I'm down with nat gas. So I usually will put the nat gas up here as well. It's not up right now, but it is one that I do follow, and that's why I use the UK account, because it gives me that bundle opposed to a different one. And I can trade in real time using their charting software. Now, I had an FXCM account a long time ago, long story, I'm not going to go into it right now, but there's a reason why they're not allowed in the United States, and it's for a good reason. So let's start a chart. I'll stick with the Euro US dollar, and I'll just make a new chart here. Sure, actually let's start with the daily. Okay. And then I'm going to do another one here right beside it, and we're going to do, let's go, the hourly. Okay. So I'm going to need these two charts to show you some things. Let's go to the largest chart possible. Now this is all the data that I'm provided with up to today, and it stretches back till 1993. Now on the surface this is really doesn't mean much. I guess at one point, there's my dollar. It was at $1 way back in 2002, and then it had its run up to 150. Oh, 160, wow. And then it's been on a slow decline since then, since this is 2008. This is the financial crisis right here. There's a bit of the rebound, the Bernanke bounce, and never really topped out. And then you had you know, the pigs and so on and so forth, and here we are right now. So I guess the way to look at it is the monthly candle. So here we are in April. So this candle represents all the trading in April, and this candle represents all the trading in March, and this candle represents all the trading in February, and so on and so forth. So after the monthly, you have a weekly chart. So right here on the monthly, March candle. On the weekly, you're going to have 5 candles, or 4 candles, 1, 2, 3, 4, that represent March. That's your high, your low, your high, your low, and those bundles represent your March. Then if I go to the daily, so here we are in April. This is March. I'm going to have 31 days of these candles representing on the daily. So here is March 1st, the high, and this is April 1st, basically. So from here to here, all of this trading was March. So it went up and down, or sorry, it went down, then up, and then it came back down again. And that's how you read that candle. You read those 4 candles in this big section. 4 candles represent this movement. Now let's go to the hourly. Like these 4 hours and 8 hours are pretty much the same thing. I'm just not going to use them as often as I would use it like a daily, a 1 hour, and a 15-minute chart, because you're going to get price movements per day, and then at the end of the day at 4:30 everything closes. So you got to keep that in mind. Once the market is closed in New York at 4:30, pretty much the day is over, a new day begins, and they start a new candle on the daily. So here is March. I'm going to use a vertical line to represent this. Maybe I'll okay, and okay. So there's March 1st, 2019, and March 31st. So all of this represents, do another vertical line, so all of this chart pattern here represents all of this chart pattern here. Now on the surface, if I was to draw like using my pencil, I could draw like that, not really seeing too much. It's more like this. It'd be like, for the month, it traded up and down between these two ranges. On the hourly, it would probably coincide with that. So you got 1/8, you got 11/18 and 1/14. One 14.4, 114.3. I guess I can move that up a little bit. But anyways, you get the point. That's your high, that's your low. They match. This is your month of March. This is your month of March. And I call this the box. This is your box. Now, I can get a little closer to what's going on here daily right now by scrolling in. So like right here is today. So I'll get to 1 minute. Alright, well, let's set up for today. So today is, what is the date today? The 8th. So here's the 8th. This is where it started. Here's basically Friday. Friday, what day was Friday? It was the 5th. So since Friday, this has been your box. On your hourly, it started over here. Now this doesn't represent too much for me right now. This really doesn't represent that much. What I need to do is go out. So what we're focused on is this little section right in here is where we're going to be trading. If I scroll out here on 2, again, all I'm interested in is basically right here. That's today. All of yesterday gives me a predictability of where I'm going to be going today. And that's all that this does, is just predicts where I'm going to be. And where I'm going to be basically is between 112 and 112 and a half so far. If I take yesterday's, well, if I take Friday's numbers, highs and lows. Alright, so I've got two blank ones here on the daily. Oh, I gotta go back further, monthly. And just to see what the heck is going on here on the monthly. So the long-term trend is down. That's the angle. Now it's staying within this price channel. Now eventually it's going to create a wedge pattern. Obviously this is what a wedge is. If I change line, extend to the end, okay, change line, extend to the end, okay, somewhere around here in this point, which would be 2036, I might see a rebound. It's possible. Or what will happen is there'll be an extension of this line to straighten it out, so it becomes more parallel. But right now, this is pretty much how it looks. It's gonna consolidate along here. So you have a long time for this thing before it starts changing directions. Now, on the daily, you gotta scroll in a little bit more. So I just drew a graph on the monthly, and this is what it looks like on the daily. Now this doesn't give me a whole lot of data. So I'm going to draw another line, because there is areas of support in here. As you can see, it's bounced off of this line for pretty much since 2017, and that's your trend channel. So, and this is an area of support because obviously it breaks out, it bounces around, travels underneath it. So if it does break below this line, you can see it heading to this support channel here. If it can't break above it, you can see it at least going up into this support channel here. But it's going to take some time. It doesn't happen overnight. And that's how we trade, because we realize that these things don't happen overnight. They are predictable. Now within these channels, there's going to be other price movements. You know, the price will bounce through here, it'll hit this resistance, it might break up to this resistance, and if it breaks up, it may go up to this resistance. It's just the way it is. So what I want to do is break this down even further. So I'm on the daily, I'm going to start breaking it down. Let's go hourly. So my resistance lines are in here. And now I need to draw another one. So I've got like low, medium high, and high. If it breaks below this line, chances are it's going down here somewhere. But we do have a little fake out line here. So this is here to fake people out. Don't want to discount that. So we got to make sure that's accounted for. And we have a fake out line up here too. So we want to make sure those fake outs are accounted for. Now, as we get closer to the day that we're on right now, so that's the hourly, let's break it down into the 15-minute. We had a bit of a downtrend. And right now, you're kind of on a bit of an uptrend. So this is actually forming a wedge pattern, or a flag. So it could break out. Chances are it will break down based off of our one-hour chart. But looking a little closer at the 15-minute, it's got a lot to travel down here still. So I can look at this a little closer too. I try not to put all my lines on one chart. I guess I'll end up putting stuff on the daily, or sorry, a 1-minute chart and a 5-minute chart. That's why I have you know, a 1-minute, 15-minute, and a daily, because every chart is a little different. So I set this one up for the daily, I set this one up for the minute, and I set this one up for the 15-minute. I just don't, you can't put everything on one chart. It's just too much to look at. But you always got to remember where your direction is. Is it breaking out? How far it has to travel? All those things to make a reasonable prediction of what's happening in the market right now. So looking at this on the 1-minute, that clearly indicates we're in a bit of an uptrend for the last little bit. And it kind of broke that uptrend it was on. And right now it looks like it's a bit of a range bound, but this looks like it's traveling. It's in a tight range. Okay, where is it gonna go? That's why I need to have hourly. Oh, we got a lot of traveling here to do before it even reaches the bottom of the daily. A lot of traveling. Like, it's got to come all the way down here, and that probably won't happen today. It might, probably won't though. So setting up the graphs is really important and takes a lot of time. Obviously, I'm a little bit of a perfectionist, and I take a lot of time trying to set up my stuff proper. Now, I add indicators on mine, indicators that work for me right now, as I have a 45 and 3-day on the daily. And the reason why I have that 45 and 3 is, like some people use 45 and 7, is when you have these moving average crosses, what will happen is it gives an indication of when a new trend is starting. Now, I fiddled around finding a ratio when these moving average crosses occur. They don't happen all the time, and that's what I'm looking for, is not something that's zigzagging all the time. If I have something that's zigzagging all the time, it's going to give me a false flag. So, like, say for instance, I want to put a moving average on here. So yeah, moving average. Fine. Sticking it up so you can see it a little better. Alright, so I got these moving averages in here now, and you'll see how they're crisscrossing here on the 7 a lot. So if I just change it up a bit, I think there's a 3. It'll give me a lot less signals here. I can change this to on my daily. What do I got? Am I using 45? Yeah. Well, that's why I'm not on the daily. That's why I didn't change that much. Let's change this back here. Change indicator to 9. Let's call it 9. So I get a lot of ups and downs on the nut. Like, once you see this moving average cross right here, this move is pretty much here, and all of a sudden it actually starts trending down. So I'm not liking that because it's giving me a false flag. This one here, it does make the moving average cross. It moves it sideways, travels down. I'm not liking that one either. So what I have change. Let's go to the 3. Now I've changed the line so it doesn't crisscross as often. And when it does crisscross, like over here, it is still traveling in the down position. When it crosses here, which would be this candle, I still have some time before it moves in the up position. And this 45 is still smoothed out. Now I've made some changes on the 1 minutes and stuff to get those signals as well. So I've got a 10-day close and a 240-day close. And these things, like I say, I'm trying to find as minimum amount of crosses as possible and give me... So like right here, I'm making a cross. And I have a likelihood of this actually starting a downtrend. And that's what we've been talking about for the last little bit was... looks like we're on a bit of a downtrend. And this is kind of showing that. Now because of this cross here on the 1 minute, now I don't really trade 1 minute charts, the likelihood of this happening for a while, what I like to wait for is at least 3 confirmations of a cross before I actually confirm a downtrend. So I might stay out of a market until I get on my 15, on my 1 hour, and on my 1 minute, all 3 moving average crosses in the same direction. Now if I have all 3 moving average crosses in the same direction, I have a lot of confidence that, so this one's above the slow moving average, this one's at the slow moving average, and this one's moving towards it. So this really says it's trendless. There's no direction whatsoever. I wouldn't actually be trading that based off the fact that there are no confirmation signals. But right here, let me just, what time is this? 22:45 on April 4th. Okay, so hopefully this will all make sense here real quick. So I have a 1 hour, a 1 minute, and a 15 minute, and I all have a moving average cross. This will tell me direction. So on the 1 minute was the first one. That happened at 21:30. On the 15 minute, the moving average crossed at 1 hour later at 22:45. And on the 1 hour, that moving average cross happened at basically 2300, somewhere around 2200, 2300. So 15 minutes later, this moving average cross happens. All that gave me a bullish signal. So I can't trade on the weekend, of course, because this is the 7th. But the price did move up in the euro for that trading session. Now, I would be really confident in taking longs based off of these 3 confirmation signals on the 1 minute, 115, and stuff. So you have a leading indicator, the 1 minute, a lagging indicator, and a slowing lagging indicator, all confirming the same direction. Is it still bullish? Yeah, still bullish. Based off of, well, except for the 1 minute. The 1 minute's kind of negated it right now. Right here. The 15-minute is on its way there. It hasn't really negated it. So I'm going to be cautious just because of my, you know, I like a 3 out of 3 rule. If all three things match up, then I will be bullish. Right now, I've got one that's giving me a false flag, so I would actually close any long positions at this point and just wait until I get a confirmation. Now, the 1 minute may do a U-turn real quick, and if it does, and it's still in the bullish signal, and a bullish signal here on the 1 hour, I'll be taking longs heavy. What other indicators do I use? Yeah, just basically the moving average and my trend channels. I don't really pay too much attention to these stochastics and RSIs and things. I know I have one here on this chart. I guess I have RSI on my S&P. I think I have an RSI on my Canadian. I have some volume indicators. Those are, but nothing really. I just mostly use the moving averages and the trend channels, and that's how I basically set up my charts. So I have a directional move here. It's to the downside on the long term. Of course, when I'm looking at this daily, you know, I see a moving average that's still bearish. It's not moving up. But these 1 hour, 1 minutes, and 15 minutes should help me figure out the direction of the daily, where it's going to end up. Hopefully this made some sense. I'm going to review this video, and if it's no good, I'll try to redo it. Alright guys.